Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. This segment is presented by Charles Schwab. I'm your host, Jill Malandrino, and joining us this afternoon, we have Chuck Fuller, Portfolio Manager at Nasdaq Dorsey Wright, as well as Sara Marshall, Senior Index Research Strategist at Nasdaq Global Indexes. We're here to discuss asset class rankings and where breadth is broadening out in the market. It is great to see the both of you. As always, Chuck, here we are again with U.S. equities leading the way. Who would have thought during the lows would he be up nearly 30% on the year?
Yeah, it's crazy. Back then it was, we were all wondering if the world was falling apart and yeah, now here we go. We're back at all-time highs. And it's really interesting to see because, basically we've been roughly 5 months after the low now. Like I said, the S&P is up 30% and that's pretty historic. When you look back in time, there's only been like five other markets since 1950 where you've had a move that big in 5 months. In all those cases going forward a year later, you're up and you're up in about an average of 20%. Obviously there's always people in bull markets who are calling for tops and this, is just like every other time in the past where we hear a lot of those calls. But we very well may see continued gains from here, which is interesting, and it reminds me of an old market adage, which is that the market loves to climb a wall of worry, right? When there's a lot of worry in the market, the market tends to not care and it tends to keep going up. So we're hopeful that that continues.
Yeah, and Sara, I mean, momentum clearly is a factor here, and your point and figure charts have been on the money. I mean, Nasdaq hitting, record intraday high this week. Are you starting to see, or where are you starting to see breadth broadening out?
Yeah, so actually the Nasdaq 100 index today hit a new record high, intraday high, recorded on its point and figure chart. So now that is up about 17% year to date. And also the Nasdaq Composite, which is all the stocks listed on the Nasdaq Stock Exchange, that also hit an all-time high, intraday high today, and is now at an all-time high in its point and figure chart. Interestingly enough, both up 17% on the year. So showing that there is strength outside of those top 100 largest names within that Nasdaq Composite universe.
Yeah. Well, Sara, with the point and figure charts at all-time highs, would you consider that a healthy technical picture, or does it feel a bit toppy here? What can you discern from that?
Yeah, so the Nasdaq 100, I was just looking at it, is the intraday 10-week trading band is about 81% overbought. So I don't think that that's too extreme here. We've seen levels well above that in the past, but we jumped up from about 66% to 81%. Still, like I said, kind of near normal levels. Anything I would say kind of outside that 100 range, which would be significantly overbought, but well above the positive trend line, about 5 consecutive buy signals on the point and figure chart. And so overall, the weight of the evidence really is positive here, again, with the all-time high today. We'll look for that potential pullback and see if we're able to continue on with buy signals. But right now we're just in a straight column of X's, and like I said, weight of the evidence is positive right now.
Yeah, which is so interesting considering the seasonality around September that certainly didn't play out. Chuck, international equities remains at the number 2 spot. Where are you seeing performance within that asset class?
Yeah. So, when we look at our rankings, we have emerging Europe and developed Europe kind of in the top two spots. Really over the last month, though, it's kind of been a Latin America story. Latin America's up nearly 9% over the last month, and they're up actually almost 40% year to date. So, they're definitely one of the best areas within the space. It's kind of interesting because like last year, like we had a lot of success in some of our funds with Argentinian stocks, and this year that hasn't been the case. They've kind of been pulled back, and it's been some of these other countries within Latin America taking the baton. So that's been interesting to see. But I think largely in the space, the thing to look for is the U.S. dollar, right? It continues to struggle. As it struggles, international equities tend to do well. We don't see any sign, at least yet, of the dollar bottoming, and so yeah, potentially international can continue running for the foreseeable future.
Yeah. And Chuck, what's so interesting too is fixed income, while it's in last place overall with the asset class rankings, that doesn't tell the complete picture. It's actually up on the year.
Yeah. It's having a great year. Like I say, even though it's in last place, they're up roughly 6.5% year to date. which is a great year for fixed income. It's in last place more because, it's had such a hard time the last 2 or 3 years. And, even though it's up 6.6%, that can't really match, international, which is up, 25%. And, US equities up, wherever they are, 12, 13, 14%. But yeah, they're having a great year, and it's really been more like the risk on assets within fixed income. So think about things like high yield, international sovereign debt, those kind of things that are really leading the charge. Like emerging market bonds, for instance, are up 11% year to date, which obviously is incredible for fixed income. And I think there's other things going on here too. Obviously, we had the weak jobs report that came out, a little while ago, and the 10-year yield kind of broke down after that happened. Basically went down to about 4%. I wouldn't say that it's breaking out of the range that it's been in the last few months. It's kind of been, more or less bouncing around between 4 to 4.5 or so on the 10-year. Hadn't really broken that yet, but it is close. It's at the lower end of the range. But I think one of the things that I'm most enthused about in space is that looking at the MOVE index, which is kind of like the VIX for fixed income, it continues to hit new lows. And really, it's at lows that we haven't seen since 2021, which is, really late 21, which is kind of when all the mess in fixed income first started. And so seeing those levels get back to more of a normal level is really good for the space. I think it just means that things are starting to function more normally again versus, again, what we've seen the last 2 or 3 years.
Yeah. And Sarah, it's interesting for the month of September on Nasdaq Trade Talks, we've been covering climate tech, infrastructure, investments, policy, and so forth in advance of Climate Week NYC, September 21st through 28th. And there's other areas of strength within Nasdaq indexes that aligns well with some of the topics that we've been covering.
Yeah, two of those indexes in particular, so our clean energy or smart grid indexes, these provide exposure to renewable energy and next gen infrastructure, reminding us really that innovation is not just digital, it's also about the future of physical infrastructure and about some of these clean areas of clean energy. So the Nasdaq OMX Clean Edge Smart Grid Infrastructure Index is up 26% year to date. Another one of note that I kind of pulled, this performance is as of the close on the 16th, so this might be a little dated here, but the Nasdaq Clean Edge International Green Energy Index is up 33%. So those are two areas of strength that jumped out to me. Again, and yeah, like you mentioned, the clean edge, or the clean energy and smart grid area.
Yeah, well, certainly silver is benefiting from this as well as it relates to energy demand because of the applications that you can, silver's leveraged for industrials. I mean, that probably has to be one of the top performing indexes.
Yeah, the Nasdaq Junior Miners Silver Index, which focuses on small companies within the silver mining industry, that's up over 103% year to date. Pulled back slightly today, but that has seen incredible performance so far this year. Another index that I just wanted to point out is the Phillips Semiconductor Index (SOX). That hit an all-time high today, up about 4%. Especially I think on the news of Intel and Nvidia today. And really that index can be viewed as the backbone of AI. So right now it's up over, again, 27% year to date and gained nearly 43% since the start of the second quarter of the year. So really seeing that take off as well.
All right. Appreciate both of your insights as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.